It's March 31st disclosure season, and today we're covering 4 companies with some genuinely dramatic filings. We've got covenant violations, a state-backed bailout, record profits, masking cash flow problems, and an environmental crisis.
4 names, all significance 4 or 5. Let's get into it.
Ticker 9229. This is the nursing care operator that had the improper billing scandal. The filing is significance 5, and it's ugly?
Very ugly. They violated debt covenants on 870 million yen in loans. MUFG and Mizuho suspended principal repayment for 5 months. The founder personally donated 1 billion yen to keep the company afloat.
And the founder is stepping down as CEO after the June AGM, replaced by an external director. They've applied to move from prime to standard to avoid delisting. Operating cash flow went negative too.
They've halted all new facility openings and designated FY 2027 as a structural reform period. The June 2026 medical fee revision shifts visiting nursing to bundled daily rates that directly threatens their high-frequency visit model.
Ticker 3103. Revik, the state-backed revitalization entity, took 66.7% voting rights through a capital injection. Classic turnaround play.
They divested the entire fiber and functional materials business, selling operations to Seren, and received 12 billion yen in debt forgiveness from financial institutions, swung from a 24 billion net loss to 18 billion net profit.
But that profit is mostly from asset sales and debt forgiveness, not operations. Revenue actually dropped 6%.
Exactly. They're now focused narrowly on polymers and glass fibers, with polymer capex nearly doubling to 2.8 billion for the Uji film factory. Move to standard market. New Revik-appointed management team in place.
Ticker 5262. This one's fascinating. Record high sales and ordinary profit, but operating cash flow went sharply negative. 3.5 billion yen outflow.
Receivables and contract assets spiked from large project orders. They acquired Manac Corporation to build a one-stop manufacturing to construction model in Chubu. Also partnered with Libroware for drone inspections in sewers.
They abolished their poison pill, which is notable, and expanded risk disclosures from 3 generic items to 12 specific ones, including cyber, M&A integration, and 3D printed product durability.
New midterm plan targets 60 billion yen in sales by FY 2030 with an 8% operating margin. Bold given the cash flow picture.
Ticker 7254. Hexavalent chromium soil contamination at Enshu Chrome triggered massive write-downs. Total special losses hit 2.8 billion yen.
1.6 billion in equipment impairment. 310 million on real estate, plus 667 million in environmental reserves. Enshu Chrome is flagged as insolvent. Debts exceeding assets by nearly 3 billion yen.
Yet they increased the dividend from 14 to 18 yen. Negative payout ratio of 204% at parent level. They're prioritizing DOE over earnings retention.
They're relocating the factory and abandoning hexavalent chromium plating entirely due to tightening European regulations, also doubling parts business capex to 5.9 billion. Pivot is clear, but the execution risk is enormous.
Watch 9229 for the covenant renegotiation outcome and whether the founder's donation bridges the gap. And 3103 for Rivik's execution on the portfolio slimming.
5262's cash flow recovery and 7254's environmental remediation timeline. That's it for today.